Hello, everyone, and welcome back to Your Finance TV. Great guest to have back with us, Brendan McCarty from Column E. How are you, Brendan?
Great. Happy to be back.
Fantastic. All right, let's start with a technical look at the S&P, Brendan. It's up nearly 4% this year and 18.6% over the last 12 months. Volatility has dropped off, and the market continues to grind higher. Can this continue its slow grind higher, or are the charts giving us warning signs that this rally has been a little bit extended?
So my view, I thought last time we spoke was I thought a first quarter rally would continue. And I only thought that because it looked like, I don't know, was it 2000? I think we had one in 2008 sort of thing. Both charts look pretty positive though, short term and long term. They both are part of breakouts. But they are both getting extended. They are extended. For the short term chart, breadth has never been this powerful. So there's a lot of money pouring into stocks. Kind of makes sense since that's where the money is being made. But if you look at various measures of momentum, we're closing into previous peaks like July of last year and January of 2020. We all know what happened after both those episodes. For the long-term chart, it's not as extended, but if we get to above 5,100, I think that's where that will trip the monthly chart. The monthly chart is more powerful when it's extended. Like August of 21 was near a peak. I think Thanksgiving turned out to be peak. December of 19 ties to January of 2020 before the plunge in the pandemic. So I don't know if we would have fallen anyway, if pandemic or no pandemic. Another possibility, another thing that I'm watching is money. Money has dropped. Money rose right into the third week of January rather significantly. That powered stocks. Stocks like money, and they liquidity and assets like liquidity in general. I think the bond market rallied during that period, if I'm not mistaken. Um, Now that money has come out the last 2 weeks, um, you get the feeling that stocks need something else to support it when you get extended. It isn't earnings because gap earnings is near 27 times PE. That's the highest we've had in a little while. So if PE and money aren't moving in the same favor, it's all risk that's finishing up the middle. We're getting into that kind of weird time of the year where everybody bails right around March. It's happened several times in the past, only probably tax driven or whatever it might be. So I would say the market is pretty extended. It can run though. We're just not fully extended yet. The big warning sign though is money. Money has driven this rally for the last 3.5 years. Anytime money starts to retrench, when risk stops going, the stock markets drop. So rally can continue when risk stops pushing it. That's when you're probably going to start seeing a decent correction, and that could take us back to 47.65 as a breakout point. And then for technicians, cup and handle moves, we all talk about them in the past. 47.65 is held, they'll run higher. 47.65 has failed. You could be talking about a top. So we'll see where it goes.
Okay, and we're going to jump straight onto the three Ls for new viewers. The three Ls, we pick six stocks for the week. Brendan breaks them down the charts. Usually there's an earnings theme to them. We're going to kick it off this week with Chipotle, and they report on Tuesday after the close.
So quick note on restaurants. I was out the last 2 nights. Holy crap. Everybody is out eating. The traffic is everywhere. I thought it was Christmas last night. It was insane. Anyway, for CMG, I like it. The chart is admittedly extended. It's on its second derivative, if you will, second range extension. But the momentum continues to point higher. So if they have a bad earnings report, you could see a retrenchment. Otherwise, the bulls are in control.
Okay, and Wednesday pre-market is Alibaba Group, BABA.
So China's in trouble again, it seems these days. I think China was down like 7% on the open last night. Tremendous fall. Baba fell through support in November. I leave it. Fell through support in November, and it has not really recovered like a dead cat in the meantime. Looks like the October 22 lows are in sight.
Okay, and Wednesday pre-market is Uber.
I don't think I've ever liked Uber ever in the 3 years we've talked about it. But we haven't talked about it in a while, so I guess maybe I've liked it before, but I like it now. It is right at resistance, so it needs a good earnings report to continue. But its trend looks strong, so I like it.
Okay, name we've discussed many times. They're reporting Wednesday pre-market is Roblox.
So when we first talked about Roblox, I ran down around the corner to my son and daughter to see if they were still playing it. They're not playing it anymore. I like it. The chart, with that said, I like it. It's holding on to the 65 week. So it has a limited run to 45 probably. A bad news report might take it right through that 65 week and end its rally.
Okay. One that's very popular on Twitter is PayPal. They report Wednesday aftermarket.
So I don't understand why PayPal is not doing better given where rates are overnight. They should be raking in cash. They have a hold period in between you send money in PayPal. It's like 2 days. They should be earning more with fees too, but whatever. I like the chart. Like it. Sell off from last week did not break support of 60, so I think the Bulls have a chance to go higher into the earnings.
Okay. And the last one we're looking at is, and very much in the news of late, is Disney.
So the House of Mouse, this might be my first like it in a long time. The chart hasn't been this strong since the fall of 2020 in terms of the variables supporting it. Um, There are always a variable. There's always something going on with Disney during the earnings reports. But right now, the buyers are in there. It might be a Dow related move, but I like it.
All right, Brendan. Well, thank you very much. It's been great to catch up again. Good luck with the 3L picks this week.
And thanks for having me. And everybody, have a good week.
And for everyone else out there, good luck investing.